Hey, everybody. Good to be here with you this morning. My name is Brent Moores. Welcome to the world of trading futures. I'm actually not the regular host of this webcast. Ben Watson is, but he's out this week. He should be back next week. But I'm glad to be with you. And really, my goal this week is to introduce you, those of you who aren't familiar with futures, to futures, and those of you who have been around the block a few times with futures, look at some various charts with you and discuss some potential trades. So that's the goal. Now, I am joined by Brett Crowther in the chat. Been working with Brett for over 2 decades now. He's very knowledgeable in this area. So as you have questions, feel free to type those questions in the chat between Brett and myself. We'll do our best to get your questions answered. And I'd also encourage you to subscribe to the Trader Talks channel. This is the channel that we broadcast off of, which we discuss futures and stocks and crypto and options and technical analysis and a whole variety of your investing and trading topics that may be of interest to you. You just subscribe to the channel there. Now, you can also follow me on X. You can follow Brett on X as well, at Brent Moores CS, at Brent Moores CS, at Brett Crowther CS, and just for additional content throughout the week there. All right, let me just go through a few important disclosures here before we get into this, and then we'll take off and get why you're here. Futures and futures options trading involves substantial risk. It is not suitable for all investors. You need to get approved to do this. But I would encourage everybody to start out with their paper money on that. Futures accounts are not protected by the SIPC. And futures and futures options trading services are provided by Charles Schwab Futures and Forex LLC. Futures margin, also known as a performance bond, is the amount of money you're required to deposit in your futures account to establish and maintain the futures positions. That futures margin, it depends. We'll look at various contracts today. Each contract has a different margin requirement. So there's no one size fits all on that. We'll just have to check on that, and you can double check that. For the sake of simplicity, examples in this presentation don't take into account commissions or other transaction fees. All investing involves risk, including loss of principal. And for some strategies, loss of more than your initial investment. Stop orders are not guaranteed in execution. Now, the stop orders do differ with futures and with stocks. With stocks, we say, hey, your stop, we don't know what price your stop will get filled at, but once you hit that price, the activation price, it will fill. We just don't know what price it's going to fill at. With futures, it's a different story. Because of something called protection points, it is possible, if the future is moving rapidly enough, that your stop order does not get filled. And virtual currency derivatives trading involves unique and significant risks. And please note that virtual currency, so we're talking about like Bitcoin futures here, is a digital representation of value that functions as a medium of exchange. A unit of account, a store of value, but it does not have legal tender status. And the material today is intended for general informational, educational purposes only. We'll be using the Paper Money software application, which is we'll look at specific examples, and that's all they are. They are examples. They're not examples. They're not recommendations. Schwab does not recommend the use of technical analysis as sole means of investment research. Past performance is no guarantee of future results. We're going to look at different futures asset classes, discuss various aspects of futures, and some example trades. Now, if you are new to futures, let me just tell you this. Futures, there's a big variety in futures. And one thing I would suggest you do is you go to the Schwab website if you want, or you can do this off the Learning Center, off Thinkorswim. But go to Learn, go to Courses. There is a futures course. Now, maybe you're already familiar with futures. We have other courses as well that may be of interest to you. So learn courses, quick start to stock investing, simple steps to for a retirement portfolio. This is a great course. I would encourage you to go through it. You can skim it if you want. You can skip to the parts that you want on this. There is a futures course as well, Fundamentals of Futures Trading. Let me just click on that. I'm not going to spend a lot of time on this, but you can click on any section that you want on this to read more about futures. If you are newer to futures, I would strongly encourage you go through this at some point there. Okay, now, yeah, so by the way, there's a futures trading investment plan there. It's not a recommendation that you go through it, but it gives you a good example of how that looks. All right, so I'm just going to get out of that. I'm going to go back here. So that's if you're newer to futures. Another thing is to realize there's a variety of futures that are available to you. I think a lot of you are familiar with like commodity futures. Maybe you've seen Trading Places, I think back in the 80s. They talk about that. You could talk about cattle futures. Well, right now, cattle futures are way down. That's something. Corn futures, soybean futures, a lot of different of these foods, coffee futures. But we're not limited to that. There's energy futures. You want to speculate on the price of oil? Well, oil's been in the news for a long time. That there's a future for you. And there's a variety of different oil futures, not just crude oil. You can go to gasoline futures or natural gas futures. You can do things like speculate on interest rates. You can speculate on the price of some of these major indexes, such as the Dow or the S&P 500 or others. And there's currencies as well that you can do futures on. So there's a variety of areas with futures that you can trade. Now, there's different purposes for futures. One that I've already mentioned is speculation. You think the price is going to go up, you can trade futures. You think the price is going to go down, you can trade futures. Now, that's not the only reason for futures. Farmers will often use futures. For example, let's say you're a corn farmer and you want to protect the price. You may sell corn futures, okay? That probably doesn't describe you, right? But could you protect a portfolio with futures? Yes, and this could describe you. Perhaps you have a portfolio that has a lot of stocks in it and you want to help hedge it. You could use S&P 500 futures. You could sell those to try and help hedge your portfolio there. So let me go and I'm going to switch on over to the Thinkorswim desktop software. And let me go back here and let's just kind of look at the markets as a whole here to start. This is the S&P 500 micro future. Now, micro future, what's a micro future? A micro future it's like the regular future, except they're typically 1/10 of the price of the regular future. You can usually identify them with the M in front of the symbol. So the normal future, the full-fledged future, so to speak, would be the ES, okay? This is for the S&P 500. You can see what we've been doing with the S&P 500. We've been going up with the S&P 500. This is going to look very similar to the chart. This micro future is going to look very similar to the chart of the full-fledged future. In fact, if you just look at the chart, let me just kind of shrink this left-hand column down. And I do this, and you look at this, the chart's going to look very similar. But some of the specs, some of the cost of it and the movement of it is going to be less with the micro future than this. So you just need to double check. But let's consider this. I'm going to go back to the micro future because that's probably more appropriate for more people. So I'm going to go to MES, okay? So here we go. And just by the way, there's public watch lists here for your futures and your micro futures. These aren't specific to me. If you go to add a watch list, you can always add a watch list by clicking on the little plus sign down at the bottom of the page. If you go to that watch list, what you will see is public, under public, futures and micro futures. But here's what we have here on this. When I'm looking at this chart and I go here, I have a 20 and a 50-day moving average, okay? The 20 and the 50-day moving average. And good question, Zinc, and I'm going to get to that in just a minute here, okay? I'm going to say we had some resistance in this area, right about there, okay? Right about there was a resistance point. Can you see that? Let me zoom in just a little bit so you can maybe see it a little bit better. That was a resistance point. And there's an adage in technical analysis that says old resistance becomes new support. Once you break through it, well, we've broken through it. I'm going to assume that this is support at this point. Maybe it is, maybe it isn't. But what we've seen overall with the S&P 500 is we've seen the general trend has gone up on this. What we've also seen is when it goes up, it often pulls back, just like that. It goes up, it pulls back. It goes up, kind of goes sideways, goes up, pulls back. If that's what we've done in the past, some traders may presume to think, hey, this is going to do the same thing now. It's pulled back. It has a history of going up. Therefore, I'm going to expect it to bounce here. Are we getting any signs of a bounce? Yeah, we had a few days down in a row. We've now actually kind of held this level. Now, if I were to zoom in real close, we'd see, well, there's actually a slight level above where our previous resistance support was, which we said was this. But that's an area. We're going to call this a support area. And what I could do is I could trade this future. Okay? So we could trade this future for this. Now, when you trade futures, just like stocks, you can trade for different time frames. You could trade more something, maybe you're planning on this being good for weeks. Maybe you think you're planning on this being good for just intraday or something. You could do either. But what we're going to do here on this is we're going to look to do a trade. And just like with stock, there are some similarities with stocks. Just like with stocks, we can put a stop loss on this. And for this stop loss, I'm going to put it under our presumed support level. So I'm going to go down here to around the 7,600 level. I'll go a little bit below that, not keep it right on the even level. I'm going to go right around to about where that 50-day moving average is. So about 75.90, okay? So I'm just going to jot that down real quick, 75.90. Now, if we were to buy this, how much would it cost us? Well, or how much do we have at risk on this? Well, here's a script. And the script, by the way, is in the description of this webcast. And it gives us a tick size, a tick value, a point value. Let's go through what these mean. So, because these are key, everybody, and you can see them elsewhere too. I'll show you where else you can see those in just a minute. But let's talk about this. The tick size is how much this can move. Every future has a different tick size. Some maybe are a penny. But if you notice the price of this future right up here, if you notice the price of this future, it doesn't go to 01, 01, 02, 03. Any change it makes is in an increment of 25 cents. Now, sometimes it may jump up 50 cents or $1 or something like that, but the minimum tick size, the minimum increment is 0.25. That's what that is describing. That's not true for every future out there, but that's what that's describing. You can see that. It always ends in some multiple of 0.25, okay? Each tick value, meaning each quarter point, represents $1.25 to you. $1.25 for each tick, which means for each point, because there's 4 ticks in a dollar, okay, or a point of the index value, because each one's a quarter point. So each full, multiply it by 4, 4 times 1.25 equals $5. So you go, $5, that's not that much. Well, that can add up. How much have we moved today? Today's not a spectacularly large move. We moved $27 on this today. Well, $27 times 5, what does that work itself out to be? 130 roughly, 140 maybe, something like that. So that's how the math works on that. If you had bought this at the beginning of the day and it had moved up $27, it depends when you bought it, then you would, if it had moved up $27, $28, you would make about that much. That's important, not just for the amount of gains, but for the amount of loss that you could potentially take on this. You need to watch your portfolio. Let me give you another example. I'm going to change this chart, and I'll switch back to the MES here in just a sec, but I'm going to go to the ES. Remember, this is not the micro contract. Now, notice how much each point moves. Notice the tick value on each of these. The tick size, quarter point still, okay? But the tick value is now 1250, okay? Not 1.25. The point value is $50, okay? Again, we're up about 26, 27 bucks. You got to multiply, it'd be 10 times as much of that, okay? That's a lot. This presents more quicker downside moves if it were to go against you, okay? So just be aware of that as we're doing this. Now I'm going to switch back to that MES because I don't want to take as much, have as much movement on this, on this, as quick a movement. MES, okay? And here we go. So I'm going to do this trade, and the actual mechanics of the trade are going to be quite similar to those of doing a stock. I could right click on it right here on the chart. I could buy custom if I want with stop. Click on this. Now I already said, I wrote it down where we were going to put our stop in. And I said roughly 75.90, okay? Roughly 75.90. 759, and I'll go 75.90. There we go. Okay, I'm going to make that good till canceled. Okay? I'd encourage you to follow along on paper money, not on your real account, on paper money here. 75.90. Now, I can put in this trade, and it's saying I'm willing to buy this for 76.96.25 or less. If I send this right now, there's a good chance it would not fill immediately, but I can move this up a little bit and likely get a fill on this. And I can unlink that. Stop that. Okay, well, we'll leave it at that. Okay, so let me just go to dollar value there. And I'm going to confirm and send, and I'm going to send this. Now, there is something else I should mention on this. And that is that when we just filled, so now we have a futures contract, MES. And if you look at it in your position statement, here's MES. And you can see that's what it looks like right there. And we can open it up just like any others, and it tells me what it is. And voila. Okay, now, let me go back to MES here. As you look at MES, it's going to, if you just do what I did, it's going to put you in the active contract, okay? The active contract is going to be the one typically with the highest volume right there. There's different expiration days on these. And you can look at that volume, 239,000 contract. That's a lot of contracts. Some futures contracts, most futures contracts are not going to have that much volume. And so just like stocks, if you see something that has very low volume, if you see something that's trading 50 contracts, 100 contracts, you may think twice before doing that trade. Here's the other thing you can look at on these. If you go to the Analyze tab, look at the same symbol there. and go to fundamentals, if you go to the right symbol here, we just do that. Here's the right symbol. You can see the information I was talking about before. Here's your multiplier. Here's your tick value. Here's your minimum tick. So on the other chart, we had tick, I think tick value, and it may have said point value or something like that. The multiplier, $5 per point on this contract. So you can see that right there. Now, that's just an example here. Let's look through some other examples here, because you can do it for, you can go be long. That's what we did. We bought the future. We bought this MS future in anticipation that this is going to bounce up and go up and continue this kind of general upward trend that we've had. But hey, look, you can go short on things as well. Let's look at another one. Let's look at, I'm going to stick with these micro futures, and I'm going to do, actually, we'll get to it, but let me just show you some other ones. Here's the MNQ. This is the micro E-mini NASDAQ future. Okay, so again, a major index. Here's the M2K, the micro E-mini Russell future. If you're a technician and looking at this and thinking, hey, is this going to bounce? Well, you know, often stocks or futures may use those moving averages as a support level. It looks like this may be kind of flagging. In other words, when I say flagging, what I mean is, hey, it goes up, kind of pulls back in this kind of pattern, and then it may break out and then go up again. May not, but that's how, you know, technical analysis work. We never know for sure. But that's been the trend of what we've been doing on this. So that's another possibility. This would be fairly similar, I would say, to the idea of the first trade we looked at. But look, this one actually happens to have the same point value of the other one we did. They $5. That's not always the case though, okay? In this case, it is, but notice the tick size is a little different on this. Every 10 cents basically. Up here, it's not moving in quarter point increments, it's moving in dime increments essentially on this, okay? Tick value, 50 cents, point value, $5, movement, $4. That's about a $20 move today if I take that point value and look at that, okay? So that's that one. Now, I'm not gonna, that would be very similar to the one we just did, so I wanna keep on looking. Here's the Dow. We actually already have an existing trade I did last week on the Dow when I subbed in this class as well. But we can go forward into some others. Gold. Well, look, here's gold. Gold has been on a pretty strong run. Little bit of a pullback though today on this. Now, sometimes what traders will do is they'll go, well, that's that, but I want to look intraday on this. So you can look at these from an intraday perspective, okay? And you can do an intraday trade. We may get to that in a little bit, but well, actually, let's do that right now. Let's take a look at this, okay? I'm going to zoom in just a little bit. Now, you'll notice these lines I have on my chart. These are called pivot points. These are a technical indicator that are typically used on intraday charts. So in this case, I have a 1 day, 1 minute chart up, okay? Intraday charts. But it gives you what the initial pivot point is. And then these would be like resistance or R1, R2, R3 points, and S1, S2, S3 points. These can be viewed in a sense like mini other support and resistance levels. And that is, in other words, when you break through one, often that will be an entry point. And when you're looking for a target, it may be a target price for you as well. Okay, so let's do this. And what I'm going to do is I'm going to do an intraday trade. So this is going to be a very short-term trade. And the theory on this trade is this. I'm going to look for this to break below our support. So I'm only going to enter the trade if it breaks below the support level. And it's going to be a bearish trade. So we're going to sell the future. Okay. We're going to sell the future here. And we're going to get in if only if we break below. We're going to sell the future and we're going to use this as a target price. So that's going to be our target price down there, right down there. This is going to be our entry price. And we'll also put a stop if we break back above this level. Now you may be saying back above the level, we haven't really broken below it yet. That's true. That's why we're not going to enter the trade immediately. We're only entering if the trade breaks back. We're only entering the trade if we break below, okay? So I'm going to zoom in just a little bit more just so we can see some of those prices in a little bit more detail. So what I'm going to do is I'm going to enter if we break below. I'm going to just jot down some of these numbers. I'm going to enter here at 46.55, okay? That's going to be my entry. Now, we'll talk about how we can enter if the stock goes to that level. But I'm going to exit only if we enter. If we break back above, I'm going to say this is going to be a buy stop at 46.71, just a little bit above this level. And I'm going to put a target down here at about 46.13. Target 46.13. So how can we do this trade? Here's how we do the trade. Let me do this. I'm going to right-click on the chart. I'm not going to buy. I'm selling. Selling means we're bearish on this. We think it's going to go down. I'm going to sell with an OCO bracket. What that means is I'm going to sell with both a target price and an exit price on this. Now remember, every time we do a stop on this, the stop doesn't guarantee to get us out on this. And in this case, we're actually using a stop to go in. Okay, Rita says, why am I doing a bearish trade when it seems to be an uptrend? This is an intraday trade. Here's our downtrend, actually, intraday. Okay, we're only going to be in for maybe an hour, only if it continues down. I don't know how long this is going to be in. Maybe we're in for 5 minutes, if we even get in. Now, if I were doing a longer term, if we're doing a longer term trade on this, would we be doing a bearish trade? No, this is what the trend has been doing. But right now, it's gone up and pulling back. That's the reason why there, Rita, on that, okay? So let me go back to our intraday chart. Actually, I don't want that. What I want is, let me go right here. I'm going to go to this. We're only getting in here if we break below a certain level. Now, how do I do that? I don't want to do a limit price because a limit price tells me this price or above when we're selling. Okay, I'm going to go to the stop. We're doing a sell stop to get in only if we break down below, and this may never fill. Okay, this is going to be at 46.55. 46.55. Okay. And there we go. It's going to be a day. Okay. That's all we need on that. Our exit price, well, that's a limit. The limit is our target. And I wrote it down. It was 46.13. 46.13. There we go. All right. Now, that I will make it's good till canceled. I'm going to make these good till canceled. Okay. And my stop, this is a buy stop. This is to get out. And that is going to be at 46.71. Now, here's the thing on this. This trade, these two trades are only going to come about if the initial trade fills. That's what the first trigger's OCO is. The first triggers part of that. First triggers part. The first is this trade right here. This is going to be the one that is going to trigger these to be active. And then if one of them fills, the other will cancel. All right? So there we go. So that's how you could do that trade. Now, let me click and confirm and send, and I'm going to send that order. Now we'll see. Right now it's bouncing off of that. It very well may not fill. If this continues to bounce up, it's not going to fill there on this. All right. Now, let's go back to Rita's earlier point. Could we have done a bullish trade? We can do a bullish trade on this. Okay. Could we do a bullish trade where we say, hey, this is likely to go down a little bit more perhaps, and I want to get in when it bounces? A bullish trade in that case. Well, yeah, I can do that. I could put in an order to buy if it goes below, say, whatever the price is, 46.50 or something like that. Could I do a trade to get in if that price goes below 46.50 and to go long the contract, 46.50, to go long the contract if it goes down to that? What kind of order would that be? That would be a buy limit order. That's not what we did. We did a bearish trade on this intraday. If I want to do something maybe a little longer term, I could do a buy limit order that says I'm only going to get in if it goes below 46.50. Then we enter that trade, and then you can look for that bounce up, just like it went up here, okay? And just like maybe this is what you're planning on here. That's not an intraday trade though on that. Now, there's a survey link in the chat, everybody. We appreciate your feedback. So it's quick. There's like 2 questions, and then if you want to put, there's a couple areas you can fill in comments if you like on that. Okay? So that's another example of a trade. So we did a long trade, slightly longer term. We did a short trade, a little shorter term. But let's look at some others here. Here's silver. Silver looks fairly similar to gold. If we're doing if we're looking at technical analysis on this, pretty similar, right? I mean, it's gone up, went sideways, up, sideways. These are what we call flag patterns. Okay, flag patterns are a bull flag in the context of an uptrend is this is the flagpole, and then it goes sideways or down. Okay, that's a flag, and then it goes up, and then it goes sideways or down, and then the expectation is it's going to go up. Typically on these patterns, this is true for stocks, this is true for futures. Typically on these patterns, it's when you're breaking out is when you'd enter. So right now, for bullish traders who say, I want to do silver futures, okay? For bullish traders who want to do silver futures, a lot of technicians would say, well, I'm not quite yet. We're still in the downward part of that flag part, and we want it to be breaking out on that. So a lot of traders would hold off on that trade there on that. Okay, let's look at some others. Another metal, copper. Here's copper. This one is actually in the middle of this one is actually already bounced. So when we were looking for the flag and we were going, well, I wanted to break, oops, let me try this again. I wanted to break out, okay? And we said, well, this is kind of, sorry, forgive me, that line is not perfect there. Let me just kind of clean that up just a little bit here. We're going to call that breakout. Well, there's the breakout, okay? So this is a potential bull flag. Now, this is on copper futures. Remember, before you do it, you need to double check your risk. Let's say we set a stop loss on this. Okay, let's say we go long on this and we enter and we say, well, I'm gonna put a stop if we break, back down, I don't know, down to 650 or something like that. Okay. So what's our risk on that? Don't be tricked into thinking, well, the risk is the difference between the entry price and the stop loss and multiplied by point value, because remember, stops aren't guaranteed. Your risk is actually more than that. Now, for our practical measurement of trying to decide, how comfortable you are with various scenarios, we may use that stop as a calculation that can help us. But if we say 650, okay, 650 is our stop on that. You got to be familiar with the math on these, okay? And we get in at 663. 663. What's the difference? The difference is 0.13. Now, when you're looking at that and going, well, point value, $2,500 a point, that's a lot. Yeah, that would be a lot, especially on the ES or something. But keep in mind, here we're talking about 0.13. So if I take my calculator out and do 0.13 times $2,500, I come up with about $325. Maybe that's too much, maybe not, but just know the number so that that makes sense for you, that the math works out for you on that, okay? So there's that. Now, can we do a target price? Yeah, you can do a target price on that. Well, now on flags, kind of a typical way people do a target price is they'll go to the flagpole, the length of the flagpole, which is the length of this move up, and then what I'm going to do is I'm going to duplicate and say, well, it's going to go up. Now, there's a more conservative way and a more aggressive way to do it. I'm going to do the more conservative way. I'm going to go from the low, okay? A lot of traders will actually go from the breakout point. That's where the flag target is. That would be a more aggressive target. That's actually off the screen just a little bit. I can adjust that if I want to, but that would be the more aggressive target. I'm going to go with the more conservative target. I'm going to go from low to high, and I'm going to put that target right around, well, almost 699. So I'm going to say a 6.99 target. Okay? And we said, I wrote it down earlier, 6.5 stop, maybe a little bit below that. I'm going to call this kind of a support level. So I'm going to go a little bit below that. We're going to go to maybe a 6.45 stop, 6.45 stop. Okay, so this is a long trade. This is a bullish trade built on a technical pattern. Technical pattern being a flag pattern. So let's do it. Okay, so I'm going to go here. Now we can right click on this like I did before. You can go to the trade tab, go to MHG if you want, go to the active contract and go to the ask price, and I can right click if I want that. Now notice this has this is done in 2 days. So it may actually go out a little bit farther on that. But remember, double check your volume on these, okay? So volume's a little lower, and check out the bid price and the ask price, and just look and see that they're relatively tight to one another, and they are here, okay? So, but the point is, as you do this by custom, we did it with an OCO bracket. The OCO bracket gives us our target price, which is the limit price. It gives our stop price, which is not guaranteed to get us out. And it also gives us our entry. Our limit price was not our limit. Our target limit was 699. Okay, 6.99. Okay, 6.99. Question in the chart, in the chat. Would a high be a good target as well? Yeah, there's different targets you can do. There's more aggressive targets and more conservative targets. And as we look at this, let me just look here. Could we use this as a target right here? Absolutely. You could use this as this would be a slightly more conservative target right there. Absolutely. That's one that many traders would probably use. We could use this one, which was the more conservative of the flag targets, I guess. And then you could use the one that was a little bit higher if we did the flag from the breakout. So you can choose your target from that standpoint. So good. I'm glad you brought that up, Thomas, because that's absolutely how I think a lot of traders would probably do that. Okay, there's our target, 699. Here's our, and I'm going to make that good till cancel. Oop, good. Yeah, I'm going to make this good till canceled. Our exit orders good till canceled. And our stop was going to be 645. 6.45. And then what we can do is we can get in here on this. And let's see. So 664 is our entry on that. So I can move that up just a little bit, confirm and send, and I can send that order and put that in. Okay. So here's the thing. This was meant more, if you are brand new to futures, I just want to, you should have a healthy caution as you go in to trading futures because there's certainly risks, there's certainly complexities, but it's also not something that I want you to be scared of either. So this is meant to familiarize yourself with this trade. There's a lot of charts out there you can look at and you can go through them, you can scroll through them. Here's the Aussie dollar. There's a currency future, trend up. A lot of technicians would call that bullish. Here's Bitcoin. Bitcoin's taken off. I did an example trade, not on a Bitcoin future, but on a Bitcoin type product yesterday in the crypto webcast. Here's crude oil. Crude oil's dropping today. Variety of different types of trades you can do here. You can go long, we demonstrated. You can go short. You can do longer term. You can do shorter term if you want. Here's the Canadian dollar. Here's the Swiss franc. And you're not stuck with micro futures, but just make sure you're aware of what these movements are on this trade here. Okay, everybody? I want to thank you for joining me today. Thank you, Brett, in the chat. Make sure you subscribe to that Trader Talks channel. Also, make sure you click on that survey link. We appreciate your feedback. And we will, I think Ben's going to be teaching next week at this time, but Ben will see you same time next week. In the meantime, I hope you have a wonderful Wednesday, or Tuesday. Today is Tuesday. And thanks for joining me. Bye-bye, everybody.